Are you crazy? And this is how easy it is. What is 1 plus 1? 2. Right? 2 plus 2 is 4. 5 minus 3 is 2. Right. In every situation, you're going to be using simple math when it comes to accounting. Then we get into the complicated stuff, and we can get into the SEC where they have all these funny charts, how to like figure out complicated modules and what's going on with derivatives. But that's not what we do in normal day business every single day. Every single day, we do things that are easy with math. And I've been in this business since 1994, so you can do the math on that today. And what I love about business is that you get to see why some companies succeed and why some don't. And some that succeed, many times, they really actually know what's going on with their books. They understand that their marketing program is bringing them money or not. They're also understanding when they spend money on a new employee, how much money it takes to get the employee up and running and producing for them. And if they're not producing, they have to have some kind of strategy to let that employee go. And they need to know what that's going to cost them. So really smart business people understand that numbers is really one of the fundamental parts of growing a great business. There are 4 keys to growing a great business. One of those keys is marketing, because you got to have the sales team out there, showing your brand, showing what you're trying to message out there. And that makes your business really strong because that gets people in the door. The second key is you actually have to have a really good product. And people that have really good product and services and customer service, they end up having great referrals from that, from their customers. So that's the second one of the second pillars. One of the third pillars is financial. And that's where that one, a lot of people, they have the first 2, but they don't know what the financial part of the situation is. They don't understand it, they hide from it. You may have, many times I'm talking to my clients, and they're actually scared. I remember one time I was holding a client's hand. She was a multi-million-dollar producer, and she just couldn't get over the fact that she didn't want to know what was in her bank account. It was good. It was good news. But she just didn't want to take responsibility for that news and the taxes that go with it. So sometimes you just have to hold the client's hand and walk them through the fear of math and understanding what the reports will look like. And the last pillar, in some cases, now with the technology, location isn't the key factor, except for if you have a brick and mortar building. And those are the pizza parlors and the coffee shops. Their 4th pillar for them and their business is location. Because if they don't have a great location, they're not going to get the foot traffic that they need to grow their business. But for other people that do service industry, we can actually almost be anywhere and still give great customer service. So what does a great bookkeeper do for you is one of the things that we do in our company is that we come to you, we figure out what your needs are, and we customize our service to what you need. So for example, a small one-time sole proprietor just opening their business, will help them set up their books, get them into a system, train them on how to do it themselves, so they don't have to pay a company like me to do it for them, because they might not have a lot of business. Then there's the next level where they've got maybe 1 employee and they're really going crazy with producing their product and they're doing great customer service and they've got things going, but they just don't have time to deal with their numbers. They don't have time to put out the bills. They don't have time to collect the money. That's when you really want an experienced bookkeeper to come in and give you guidance. To give you guidance, take your numbers, get out your invoices, or help the people that you have already in-house doing it to support them to get it further out there. And then the third level that we can help is when you're making lots of money, which is lots of fun, we can help you avoid giving it all to your organization. Oh, please. So here are the moving parts of a business is, you look at the source of income. You can have multiple streams of income, like I have a blogging company. They have multiple streams. She's got appearances that she's doing. She's got, she is actually doing blogs for other people. She's got where she's actually promoting other clicks, like she's advertising on her own, inside her own blog, making money from that. So there's different different streams of income for her that she needs to understand where it's coming from. So we take a look at where your streams of income is coming from. So then when we look at the, we take all your bank, credit cards, and loan statements, if you have loan statements, and we filter them in and try to make sense of them inside a very, inside where everything is going. So we take all the different situations that are happening with your money and filter them in through, we use QuickBooks. There are other really great financial software out there like SAP for more advanced that you can go. But for the most part, we take all that information and we filter it into this accounting software, and then we're able to look at a really easy profit and loss statement. Does everybody know what a profit and loss statement is? Yeah? Yeah? So if you don't, it's okay. It just means on the profit and loss, it means the income, the money that's coming in, and the expenses, the money's going out. Another thing that you will have in a financial statement situation is a balance sheet. Does everybody know what a balance sheet is?
Yes.
Yeah, kind of. Balance sheet is like the top half of it is an asset. The asset is, when you look at it, it's your personal belongings. So for example, you own your bank account, really. The money that's in that bank account is yours. So that's an asset. That's kind of tangible hard asset. You have equipment. I'm looking at the electricians. And you have equipment. You have a truck. You have your tools. You may have bigger machines to do testing on the equipment at the site. So all these are fixed assets that will be on your balance sheet. If he was really cool and he wanted to give a friend that's down in the dumps a loan, if his company gave that friend a loan, that would be an asset to him. On the bottom half of a balance sheet, you'll see that there are liabilities. Those liabilities have to do with what you owe. So if you owe money to the credit cards, if you owe money to a loan, like a line of credit that you might have gotten to advance your business, buy a new product, these kinds of things will show up on the bottom half of your balance sheet. And then at the very bottom, you'll have some equity, and that has to do with what you put into the company or what the company has earned over the years. So that kind of works out that way. One of the biggest mistakes that many people make when they're doing their own books is they say, when I pay my Visa card, it's an expense. It's not. The Visa card is a liability on your balance sheet. The individual charges that you charge on your Visa are expenses. So if I go get my hair done and I charge it on my card, when I account for it, the actual hair appointment that cost me maybe $60 is going to be in the expense column. When at the end of the month, when I pay my credit card bill, it's going to go against the liability, the credit card. So it kind of works out like the same like a bank account. And I know that's a bit confusing because I don't have an actual example that I can show you, but that I can talk it through if anybody wants to know more about that. That's a common accounting mistake that people make. What I'm talking about today, one of the things that I like to talk about is QuickBooks. The two types that I use is either the desktop or the QuickBooks Online. QuickBooks Online has come a really long way from its incubation stages like 10 years ago. And it's really exciting because you can log in anywhere and do your update. What's also really nice is you can download an app on your phone. So if you're an electrician, a plumber, a carpenter, and you're going to your client's business and they owe you money, you can give them their credit card, swipe their card right there, and it goes right into your accounts, and you can apply it to their invoice, and they're paid. And you already have it accounted for, and then it's streamlined. So it gets really exciting when you can start using this. You can add on other users who just use the customer service part of it, doing the invoicing and collecting money. This is, again, just a profit and loss. In this particular company, they're doing really well. They made $4 million in gross, and down at the bottom, after all their expenses, their net income was 1.4. In this particular scenario, this company doesn't have a 401k plan or a profit sharing. So we might look at them and say, you know what? We need to make an appointment with Patricia Dunn because she needs to come in and help this company save some money because If not, they're going to pay a large portion of that 1.4 off to the government. So understanding your books before the end of the year, you can give you some tax advantages in terms of if you want to buy some more equipment, if you want to expand your sales department, if you want to put in that awesome retirement plan, you can do that. You can also have, they don't have a health insurance program, so they might actually, we might want to get Brandon in there to give them some health insurance to really kind of boost morale. There's some distinctions between taxes, and I can talk about this later, so if you have any questions, if you know about the different distinctions about taxes, you can talk to me. And that's it.
Thank you, Grace. Big round of applause.